and we couldn't be more excited. It's your boy Bags with Nick JFDI and Gautam Gpaiza, as you will find him on the internets. How are we, fellas?
Yeah, doing great.
Good.
Yeah,
GP?
Yeah.
doing fantastic. Looking forward to spring and summer and the rally that's going to be ahead of us, of course.
You're still trumpeting that bandwagon, huh?
Yep.
Absolutely.
Awesome. Awesome. Well, this will be my indicator. When you see me change my red bottle to a different color, then I'll be less bearish.
Is this like the infamous purple tie of J Powell that he's worn twice now, and we've absolutely shat the bed?
Speaking of Jerome Powell and the FOMC, they just announced no rate change, which I know some bulls were really frothy for a cut. How do you guys feel about it? Does it matter?
I don't know. I I find Fed days pretty funny because you usually get a lot of people tweeting about like, first move is the false move, wait for the real move, or the real move comes the following day, or they everyone tries to like tweet that saying until like their bias is like until what happens that they wanted to happen, then by all means everything goes out the window. I think uh, it's probably more important like how we close out the week because if you're looking at like a bunch of the Fang names, or I mean, I guess any name really, a lot of people are kind of calling for that bear flag, and so the way you could look at it as is these names are kind of starting to create like their first ABCD leg up, or if we resolve to the downside, then we have that bear flag confirmation. So. I mean, I think that obviously is what we're waiting for, but being that today is Wednesday, I'd rather wait to see if we get some follow through tomorrow and then how we close on Friday. I'm long nonetheless. Like
I got the
I'm not in the
cues up
bearish
on the
camp like
screen
you.
there.
So,
There is said flag you were mentioning, I believe, right?
hmm
Yeah,
take a look at Nvidia though as a better example.
sure. I'd love to do that for you, Nick.
Like Nvidia already had that kind of nice hard pop up off the lows. Like if you weren't already getting long Nvidia for just whatever reason, your entry is that pivot high, and so like that would be your B point. If some of these, or if the majority of these Fang names like start to lift, they're going to push the Qs around. So I don't know. I mean, the way that the market's responding, or at least as of right now, seems to be favorable. But I mean, who knows? Who knows what happens after he starts talking?
Yeah, usually, I mean, the false move or the first move is a false move is a saying because it happens so often, right? And I think a lot of
Yeah.
that happens when traders see something happen on the announcement and then something happens while he's speaking at the press conference.
Oh,
And
sure.
often the market turns the other way. It doesn't mean it stays that way, right? We've seen it go one way or the other the following day or trending later on. But on Fed Day, typically, the announcement happens. You see a little bit of fluctuation, a little bit of volatility, and then something happens during the press conference that the Fed chair says, and we're off to the races one way or the other.
Yeah, it's like that's definitely part of it. It's also a form and function of flows and positioning, right? A lot of people hedge into these things, thinking that J Powell may surprise or do something that's unexpected, say some right off the bat, right? The 2 p.m. So you have the initial. Usually, it ends up being um, like a mini pop because people are covering. Unless there is some like December, right? December was not a mini pop. December was a straight death strike. But in general, if there's nothing crazy that happens from this stuff on based on implied volatility, you have the initial move up, and then it bases on what he says or what he doesn't say, or whatever the positioning comes in after that. So it's a form and function of of what's going on in the market mechanics as well, right? People are just covering their hedges, essentially saying, "Hey, nothing crazy happened. I'm covered. Let's go." You'll see typically VIX drops around this time as well. So yeah, there's a couple not only is the news a thing, but it's also for market function.
How do you guys normally trade Fed Day? Are you trying to be out early? Do you just sit and watch typically? What is your routine on a Federal Reserve announcement day?
If
So
I
go ahead, Nick.
Oh, go ahead.
No,
I
no,
was
go
gonna say
ahead.
if I have day trades on, I'm probably dumping positions heading into the announcement. I don't have any particular day trades on, so it's kind of a moot point. But uh, kind of Fed announcements are very similar to like EPS announcements. Like if you're a long-term position trader, these things should really be a non-event. The bigger thing with interest rates is the general trend. So like if we're in a interest rate slashing or interest rate rising like environment, like that's what's going to dictate trend, generally speaking. So I think it's in O'Neill's book. He talks largely about like the three consecutive either hikes or cuts. That typically marks like major turning points. So like anytime we have one of these Fed announcements, I think it's more about the following. Like if they would have cut rates today, then I would have been more interested to see if they were going to cut rates on the next announcement and going forward, as opposed to this one in particular. Like I couldn't, you know what I'm saying?
But in general, if you're trading on Fed Day, you're wanting to be out before the announcement comes at 2 o'clock.
Yeah, then you're going to reset. You should already have your levels kind of set for what you're looking at, so that you can either. I mean, again, that kind of depends on your style and how you're trading, but like after the announcement hits and the volatility comes in, you're going to either be buying or selling versus those extreme levels that you kind of already have in place, or at least you should be. I mean, otherwise you have no plan. I think it's difficult to look at on the short term, looking at a Fed day as anything more than like short term volatility. Like I think that's all you can really give it.
Hey GP, are you the one mashing the bullish button here inside of Stocktwits on our live chat? There's a bullish and bearish button, and somebody's just pounding the bullish. We're at 98% bullish. Is that you?
I didn't even know what that was. Now someone's having a competition, and we're getting some bear. This is hilarious. Um,
I love it. Keep it up, chat.
yeah, just keep it going. Um, so to answer your question, I don't really trade FOMC, right? It's just not worth the headache in other direction. I do particularly love the March FOMC time frame because we have since Volmageddon seen this correlation between February OPEX, post OPEX, and March OPEX and FOMC, and reactions accordingly. So to see what we get out of here will be interesting. I think from a price action perspective, these names that we've talked about over the years, over the last couple of months as well, they're all in 2022 downtrends. 2022, right? Monetary regime change, big uh, ick factor, all this other stuff that's happened. Um, Look at AMD, 12 months. That's a perfect example. 12 months of a downtrend. It is the exact same move as 2022 in the middle of an AI boom. So what I would say is we're at a point where I think you can lean one side or the other because your risk to reward increases greatly, right? So you're at a point where in the indices and in a lot of these things, you're at like 3 standard deviation moves. You're at some of them are even 4 standard deviation moves like Tesla and stuff like that. But AMD is a good example. This is the third week in a row now. It's going to potentially put it in a green week, right? This is in the middle of a market meltdown, the end of the world, the crash, the everything, and it's 2022 type moves in a lot of these chip names. not named NVIDIA, not named TSM, not named Broadcom.
Broadcom.
But if you remember back in 2022, at that time it was Apple and Tesla that held up even through the October correction and everything. And you know when Tesla and Apple died? November to December to January of 2023, right? When the rest of the market was bottoming and pushing out. So if you're kind of following the same pattern, is the three names that I just posted are the leaders of the sector, and they are just starting to kind of do their correction, do their bottom, and so you're seeing focus in a lot of other names. So I think you're at a point where you can set really tight risk to reward scenarios and be long, right? And you're at peak set, like Tesla, for example, everyone hates it. It is like we literally had the governor of Minnesota on stage today pulling up his phone and talking about Tesla's stock price, right? Like an American company. You have peak fear, you have peak everything. Everyone thinks it's going to go to 180, which it can, which is still a possibility, but because Tesla doesn't act with the rest of the market. But I think in general, you're at a point where you can throw on positions and not risk a lot to the downside, right? If it does break down from here, this is the same conversation we had, I believe, October 2022, Ben, right? Which is
that was a long time ago.
Yeah, it was, but it was the same, like, if things don't break down here, that was the 250, 260 level in the Qs. You have a possibility of a monster epic rally from here because things aren't terrible. The second legs, we've talked about this so many times, the second legs in markets always come with a piece of bad news, like a really piece of bad news. So if we're going to break down here, especially in a lot of these names, maybe not the indices, you're going to need a second catalyst to get us going. So that's stuff I'd be watching for. Right now, FOMC is not that second catalyst. Obviously, Jay Powell will say, whisper sweet nothings in everyone's ear, and Steve Leisman will ask some stupid questions, the usual.
Yeah, I don't expect Jay Powell to come out and say something, too inflammatory today. That's not his style. He just answers the question, and I think, what was it, September of 22 or August of 22, when he said there will be pain, right? Or there's going to be some pain short term.
Yeah.
That wasn't at a Fed meeting. That was actually at Davos or something. So it's not his script. It's not his script to come out and just want to set something on fire or necessarily prop it up. In my opinion, he's a pretty even-keeled dude, especially during the announcement. He wants to give answers without giving answers sometimes, right? And I think there's some read between the line moments, and that's usually what gets people in the market, going one way or the other. We just brought up the hashtag awards, GP. That was such a great answer there that we had to plug your hashtag award that you're up for. Hashtag awards presented by eToro, mind you. So hit the Stocktwits page, go hit the hashtag awards, vote for GP and any of the other nominees that you feel like it. We also have on Stocktwits what's trending now. I just lost my screen for a second. Let me pull it back up.
Man, the indices look ready to rip.
Top trending items here, CSAI. You hit that little blue flame there, and you can see what that is all about. Cloud structure. Never heard of that one, but we've all heard of Meta, right? Well, let's take a look at Meta real quick. Nick, this is one in the past you've really liked, especially for trade. How are you feeling about Meta down here?
I mean, I think it looks great. It's sitting right on the 200-day. Kind of to GP's point, like I think some of these names are in pretty low risk spots. Like, I mean, if you're a long-term investor, like, well, I don't know why you wouldn't be adding to Meta right here.
So Meta is an interesting one because almost every stock that's in that lag 7, the mag 7, the FANG, the MANG, whatever the hell you want to call it. The mistake they made was taking out Netflix, by the way. The
Netflix looks as good as Netflix
Dude, it is
looks as good
literally
as
the
Nvidia
strongest
to
one.
me.
Literally the
Yeah,
strongest one.
yeah,
And it just filled the earnings gap and went right back through. And Netflix leads the markets. I'll say it again and again. But I think Meta might undercut the 200-day, Nick. Like
sure.
Nvidia has, like it just seems to like a lot of these names, like they all undercut the 200-day and maybe base underneath that and then flip it higher. It was weaker today, still is kind of weaker compared to the others. So I would watch for potentially one last kind of ring you under the 200-day and then rip higher, right? Like create the liquidity that's needed to go higher.
You might get that. The only reason I'd be throwing some cash to work here is just if most of the mag names are going to generally move at the same time or move together. I mean, usually you get the majority of them, but I mean, Google, Amazon, they all look like they're kind of bottoming out right now. Netflix looks phenomenal. Nvidia looks great. Nvidia and Netflix definitely by far my fave. Microsoft looks nah, and and Meta's just sitting on the 200 days. So,
I,
but yeah, I mean, yeah, I agree. Like you could definitely get that spike lower.
None of the mags go at the same time. We know this, right? So that's my thought process. And because the corrections in the names like Amazon and Google and the other names are like greater and stuff, so I can see Meta lagging while the rest of them pick up some slack. That's all I'm saying.
Sure.
So it doesn't mean you shouldn't buy, but you should buy in spaces, right? So like let's say you want to put 10 grand to work for Meta, I would split it into three and buy in three lots, right? So
Yeah.
like one here, one on a potential break below, and then one on a confirmation above, right? So give yourself an opportunity to get long over time, not the same way. Because I can see it undercutting that 540 level, right? Which it kind of based that for a long time to grab some liquidity,
Yeah.
Sure.
and then rip higher. And we know that the Mag 7 or Mag 42 or whatever I don't even know anymore, never go all together, right? There's always a couple kind of lagging while the others get more flow, right? It's a finite piece of capital that goes into FANG, and they just rotate between the names for the most part. So that's all.
Yeah, I think around that line that I just drew there on the weekly chart, 526-ish, 7-ish, somewhere in there would make sense for a bounce.
Yeah.
If it got down that far, obviously. There's no doubt, or there's no reason to speculate whether it will or won't. We don't know what this market's going to provide, but if it were, that would be probably a good point to take a look or see what happens from there going forward. By the way, J Pal is on the mic right now,
Yeah, I
and
was gonna
seems
say,
like
what's he got going on? Because
the market seemed to like it. His initial
yeah,
statements. He's just putting out his initial statement right now. He hasn't taken questions yet. So he's just saying we're not doing anything. We have our dual mandate. We decided this if we decide to slow our balance sheet. We'll do. It gives us opportunity to do that by not changing the rates right now. So he's just going over the P's and Q's, and I'm sure he'll get more Q's in the questions here shortly. So the market tends to like it. The S&P is up almost 1%. I'll flash it on the daily look there. So we're bumping up against that 9 9 9 daily moving average. I'll spit that out eventually.
So Ben, you're asking us our thoughts. What are your thoughts? Like, what do you think where this market is going? You've been on
Oh,
the
yeah,
I
Mr. Bear.
Yeah, no, I'm a bear. I'm still a bear. Nothing's changed my mind to believe that. If you go hit Stocktwits and check out this awesome Chat GPT thread I put together about the current environment, it gives you some positive outlook, some negative outlook, and the most likely scenario. So I thought that was pretty useful this morning.
I saw your
I'm
post. I haven't gotten a chance to check
I'm
it
I'm
out.
still. It's a very long read, so pull up a chair and grab a cup of coffee and let it wash over you a little bit. But no, I think, as I've said all along, I want to wait till the end of the quarter. We're coming up on that now. I think the FOMC meeting today was a big reason to watch. I thought if they came out and cut, we might see a pop initially, but I think a cut right now is the wrong thing to do. So they didn't cut. So that's positive for me from a bullish standpoint. But just like J Powell's saying right now, we have to wait and see. We have to see the data that comes in, and I need to see more uh, price, right? Price on the chart. Right now, Nick, as you so eloquently put it, there's a lot of potential bear flags out there. And if it doesn't turn into a bear flag, then that's a very positive thing because with a false move, there's going to become a fast move, right? Most likely.
Yeah.
So we got to see. We bump up against these moving averages. There's the daily 9. Here's the weekly. We're sitting on the 50, which is not typically a great place to be on the SPY. The monthly, you're below the 9, right? So price action right now, and the spies, and even more so the Q, where the Lagnificent 7 are. I love that Lag 7 GP. I don't know if you came up with it, but I'm going to
No, no,
take.
no. I thought I'm into it. I'm not.
All right, all right. I'm going to take it and run with it. Um, I don't see anything in the Qs right now, which I love to be in these high growth names. I don't see anything that's making me a believer right now in that this current structure is going to trend bullish in the near term. So that's where I'm at. Again, I reserve the right to be wrong. I hope I'm wrong. I don't want to be right on this, but I protected myself, and I hate for people to lose money to the downside. Especially people who are active traders and they may be nearing a retirement, and the difference in what now versus 6 to 9 months from now could look like could force them to stay in their job a little longer potentially, right? So anyway, I think we're still down is still the most likely scenario. But I would welcome some chop here and start to see some bottom. I would love to see this area right here to behave something like that for, I don't know, next couple weeks. Let the market get its legs about it, cradle these moving averages, and then we can move. Right? That's you got to carve that bottom out unless it's just a V straight out, and it doesn't look like a V straight out right now.
Yeah.
Or am I
No,
wrong?
I think so. Here's
no. I mean, I think. Oh, go ahead, GP.
I was saying, here's the thought that occurred to me last night, which I know that's a narrative, and I know it's my bias, but back in August we had the yen carry trade crisis, and um, right now we've seen lag 7, mag 7 be really weak comparatively. Once the Bank of Japan made its decision, which was last night, look at that, all of a sudden um, lag 7 is no longer lagging, so to speak, right? And so um, you have this weakness in the Magnificent Seven. No, Fang, man, the Fang names right into the BOJ crisis, which also aligns with FOMC, which also aligns with March OPEX and February OPEX and all that other stuff. So it was a bias or a narrative that was occurring to me is like they were preemptively selling these names because they were over leveraged last time, and so they didn't want to be caught off guard if Bank of Japan made a decision that would put them in a position that would cross. And so you saw this lag compared to the rest of the markets in these names, and that coincides with the same area we're in. So you have a potential double bottom setting up here with the yen carry trade. It was just a narrative. I'm not saying it's right or wrong, but I was just thinking about that. Give you a different perspective, Ben.
Yeah, no, I hear you. And if we go back to August, which is on the screen there, I just think this is different because there's so much more structure to the downside, right? This is just coordinated selling. Over there, we had gap down, gap down, gap down, gap down, right? Until it gapped down finally and bounced. So maybe we need some gap downs to get a bounce because I don't think we're necessarily set up to V out of this like we did in August.
Oh, yeah. So what I'm saying is
cut.
because it was coordinated is because that narrative makes even more sense for me, right? Like the fact that I'm not saying it's right or wrong, just the fact that it was crap. Sorry, the fact that it was controlled. I gotta stop talking with my hands. Just tap the microphone. Anyway, just thought it was controlled and someone was. We've seen it already with Citadel getting hammered over the last month or so, and a couple of big hedge funds getting hammered. So it just kind of worked with what I was thinking, that this downside pressure is usually someone getting blown the hell out without any bounce or anything. So anyway, that's just what I thought.
Yeah, I'm not saying you're wrong, GP. Just to be clear, I am open to being wrong, and I hope I am wrong eventually. But right now, I'm more right than wrong.
Yeah, I mean the short and near term trends are down, so you're obviously the one that's more in alignment with that kind of dominant trend. I think bulls are what they're kind of hoping for, at least on the technical side, is like, on the SPY, if we could push into like the 580s, like mid 580s, and then kind of roll over and kind of base there for the higher low. I think that would be a dream scenario.
The
I
one
don't,
thing.
and the other thing I was going to mention is that, everybody that's involved in the markets has heard of the 200 day, the 50-day, these major moving averages. It's not realistic to believe that either a certain moving average is going to act as some form of like support or resistance rather than like it's a zone. It's just an area to watch and more of a trend indicator than anything else. So like to expect like a tap and go off of one of these major moving averages is you're setting yourself up for disappointment. You're more likely going to see what we're seeing. Like let's just hypothetically say the SPY does bottom right here. You're more likely to see this type of action around the 200 day or the 50 day as opposed to just like a real quick tap and go. Like you only see like monster stocks that are absolute beasts do like tap and go off the 50 day when they're, in the midst of their major trends. So
Yeah, you'll see those more happen on weekly and monthly time frames because that
oh yeah. Yeah.
right? Like on the daily, there's a lot of plays and short-term flow and stuff that dictates movements, but a lot of times the weekly trends tend to dominate. But I would, Nick, if you take a look at a lot of the chip names, I would argue that the leading sector of the markets are not in a downtrend.
I was referencing the Qs and the
Yeah.
SPYs.
But it's got to start somewhere, right? And we based our entire 2-year bull market in 2022 to 2024 on chip names, right? And so they were the leading sector, and everyone was concerned that when the leading sector falls, the markets fall. So I would just highlight here that the leading sector is no longer falling, and it's actually pushing above and flattening out or starting to trend higher on their moving averages, right? So the trend has changed in one of the leading sectors. So that's part of what I'm also looking at. There's so many things I look at, but that's just one of the things.
Well, right now the market's behaving like it's liking what Fed Chair Powell's saying,
Yeah, let's
referencing
rally.
back to my Chat GPT
Oh yeah.
discernment I gave. Um, I ask it for some takeaways for retail investors, based on all the data and information that it shared. And for the next 3 months, focus on stability by reducing risk exposure and increase cash reserve. Defensive sectors like utilities, healthcare, consumer staples. Avoid high risk growth stocks and consider hedging. That goes straight into what I was about to say is the SPY actually looks much more healthy than the Qs currently.
I agree.
And the SPY has some of those healthcare names. It's not the biggest and the fastest growers like the Qs would be. But at the same time, when that party does shift over to the high growth, that's where you want to be, or that's where I want to be, obviously. So I kind of feel like, based off of the information that ChatGPT gave me, with asking it to summarize it and distill it down for the retail investor, I think it did a pretty good job and pretty much hit my strategy without it knowing strategy. Speaking of my strategy, I need to look at Pfizer. That's a nice dividend play that I purchased recently.
Yeah, Pfizer, whatever. I don't even look at Pfizer ultimately.
It went over 26 yesterday, so that was good.
Yeah, I just added for the dividend. It was like 7% or something like that. So
Yeah.
it's a solid name. Over time, it'll be fine. Yeah, if so, are you guys? So I got to go over to commodities because I think if you're not focusing on tech, there is a bull market that's been roaring for months now.
Look at gold. Oh my
Bingo,
God.
gold, copper, silver, right? This is I think we talked about this a few months ago or a month ago or whenever it was. Is like, um, if like things were as bad as people really want them to be, so they can buy cheaper or make a crap load on their puts or whatever. This is not what I would expect to see in metals. Maybe gold because it's safety, so to speak.
Yep.
But look at silver, look at copper. The entire space is going out. And we talked about this. I think tech is going to lag the markets in general over the next couple of years. They'll still perform their cash cows, their everything, but you should be expanding your footprint into names that I think will benefit from a general economic resurgence, right? And you're seeing it in these metals, you're seeing it in these names, um, and it's like, is this a correction? So the question continues to be, is this a correction in an ongoing bull market, or is this the beginning of a monster bear market? And when I see these things like commodities and metals and stuff that are economic drivers, that are manufacturing drivers, it tells me that it's a correction right now, right? Price action turns to the downside, everything collapses tomorrow, then we have a different conversation, not tomorrow, but after March OPEX, right?
Well, I think to that point, GP,
Yeah.
with commodities, specifically copper, that's a big play in the defensive sectors, right? So you've got energy and infrastructure, which would fit that thesis of growth continues to lag on the positive scenario of what's happening with United States policies,
Yeah.
right?
But this is what
So
we've been wanting,
just
right?
because
Price expansion.
right, just because there are areas that are doing better doesn't mean that your my bag that we're holding in, I don't know, just pick a name, Sentinel One or Rivian or Mobile Eye, right, or AMD for some people, or Intel, right? Well, we can pick out a lot of different names that wouldn't fit that defensive stock and energy infrastructure or commodities, while they can still do well.
Copper is a big part of chip components too, I believe.
Hmm.
Yeah. So, um, I think there's definitely names that will. Like, copper is a big part of EVs as well. I think, right? I
Along
just
with other rare earths, yeah, for battery
I,
production.
I think I think it's just something like a file it in the back of your head, think about where we're potentially going. And I know the Chat GPT timeframe, I briefly read what you said, which was 10 to 15 years out for this to be implemented.
Some things. It
Right?
gave
But
different areas of this rolling out and the different amount of times that it would take to rebuild or restart or start from zero on some of these industries. Like textiles, 2 to 5 years, it should be up and fully running.
we're also in the S part of the technology curve, right? So you're in the part where AI is one of the things that is helping us um, get better in implementing our processes, right? So my thought process there is that that's based on previous history where we had old manufacturing ways, creation ways, all that other stuff. If you have this new technology, so to speak, getting implemented in these economic scenarios, maybe the time frame is shorter, right? Maybe the time frame for the initial part is shorter. Maybe the factories take a lot longer, right? So um, it's just stuff to think about, I think, in general. But um, market so far is liking what he's saying. Tomorrow we can
Absolutely.
hate it, but so can we talk about Tesla?
We can. I would love to talk about Tesla.
Yes, bring up the chart. I think it's one that go back to 2020 on a weekly time frame. Right. So the move from Tesla's low in post-COVID to the highs and the retrace back to 101 in 2023, early 2023, was 78% retrace. And then went from 101 to 299, I believe. Correct? I think so. Um, and then from 299 we retraced to 138, which is a 78% retrace. And then we went from 138 to 488 and 214, which we tagged last week, I believe, or got close enough. It may drop down to that area. Is a 78% retrace. Each one,
217.02 was last week's low.
yeah. I think after hours it hit like 210 or whatever, right? So let's say it hits it again for a retest of that after hours low. All three are 78% retraces after monster moves, and each one is getting shorter in time frame on the moves down. So it like to me the first one is a big distribution cycle after a big move. Second one is redistribution and reaccumulation, and the third one is the spring. So something I'd be watching here that I think there's a lot of similarities here in the chart structures. That the first time we went from 101 to 299, so what is that, a 200% increase? Second time we went from 138 to 488, which is what, about a 300% increase. So if Tesla does bottom in this zone, in this area, you could see a really, really solid, quick move. And we are at peak. Like my wife is telling me to sell the Tesla because she does not like Tesla, right? I mean, she doesn't like Elon, and we're deferring on opinions on his. He's eccentric. He's a lot of stuff, but we're at peak kind of fear. You have senators and politicians, they're blowing stuff up and firebombing things, and people are going nuts. And so it's been the cycle for, good knows, everyone knows it has 50 to 60% drawdowns almost like every 3 months, right? Like it's literally the stock that does this all the time. So one to watch here, I think.
Dude, we're pumping hard.
Huh?
We're pumping hard.
Yeah, we are pumping hard, but I talked about that yesterday, which is on the hourly time frame, on the NQs, we swapped from being bearish to being bullish, right? We went back over the SMA, came back to retest it yesterday, held it. We're pushing back up. The time frames are starting to align on the hourly, this 2 hour, the 4 hour, right? So when you'll get another point of weakness when we approach the 4 hour, if we,
485.
what's that?
485.
What do you mean?
That's where we're going to approach, right? The 50, 4 hour 50, right here, the orange line.
Yeah, yeah. So when the 50 starts to cross back over or curls and starts to cross back over the 200 day, you'll probably get another weak moment. It's been typical in a lot of these things, but the shorter time frames are starting to repair themselves and break higher. So I've posted this chart many times. I have it on my screen, which is the 30 minute, the 1 hour, the 2 hour, and the 4 hour, right? So when you don't have all time frames aligned, you'll have a lot of herky-jerky motions in the markets. And once all the time frames start to align, especially with the golden cross and all that other stuff, you start to see much more fluid motion. So yesterday
Yeah.
we had the hourly golden cross and weakness and retest, which helps repair and held, right? That was the key part, that it held. And so that hold is now something to build for the 2 hour at a time frame to repair. And then once the 2 hour time frame repairs, the 4 hour time frame repairs. So just something to watch, that we could get moments of weakness into March UpX and other stuff, but they're working on repairing the time frames.
If you're watching this and seeing the screen, you probably wonder what all these lines are on this QQQ chart. I'm going to back out just a little bit. So this rectangle here, this blue rectangle, is the range that GP said on a previous show that he expected us to stay in. That was somewhere up here. Now we are below it and retesting it. We've already retested it once, but that 485 mark, which coincides with the 4 hour 50 moving average, bang on right now, 485, where the bottom of that blue box is. So just to give our viewers at home a little bit of understanding of what's on the screen here.
I appreciate that, Ben. I think when those things start to align, I think it gives you better positioning power, better trading power, and so I share it because I think it's important to look at it on all time frames. And for me, I start at the smallest, which is 30. Yes, I look 5 minute charts, but 30 is where I watch trends. If the 30 trend changes, then you watch for the hour, then you watch for the 2 hour, then you watch for the 4 hour. So just stuff to watch. We have a great day tomorrow. We could gap down, today, and we can gap down tomorrow to help repair the 4 hour. So I don't day trade personally, but I watch this stuff to understand what the price movements are, and it's something that you can add to your repertoire as well.
But just one thing to add to that, GP, I think, I think that's right as far as where my mind's at too. I would definitely like to see price get back inside of that range, right, and hold that range
Yep.
on a weekly time frame. So I'm looking at that 485 as well, because then you're above the 50 weekly, you're inside of the range, and can it hold there? I think it's okay if it sort of oscillates around that number, but what I don't want to see, I'll put my bullish hat on, from a bullish perspective, what I don't want to see is that to run up in there and then almost immediately fail, or sort of faff around in there for several days to ultimately fail. I would like to see it to get in there, maybe bounce around a little bit to retest the bottom of that range again, and then shoot higher toward this pink downtrend line that I've drawn there. That's what I would like to see if I were a bull, to sort of convince me that this is for real. Now, if I put my bearish hat back on, I'm going to say, well, it's nothing but testing the top of the range, right? And guilty until proven innocent. So I would want to see it definitely bust through that and make me look foolish, because it essentially gapped up or just continued to push up.
No, I appreciate that. Do me a favor. When I was talking about it, you had the Qs up. I was talking about the tech futures and Qs, right? They're a lot more active and stuff like that. So,
There you go.
4 hour. Yeah. So Why does that look different than mine? Oh, you're not showing the 200. Show the 200. Right? So here's a scenario of you see all the short-term moving averages on the 4-hour turning up here, about to cross over the 50, which is the yellow line, I believe, right, Ben?
Yep.
And that 50 is starting to flatten out and potentially curl up. So as you see these short-term moving averages, the 920 curl through the 50, you see that short-term trending motion on this 4-hour is starting to pull higher, right? So what I can see here in scenarios is that those crossover, we get a continuation tomorrow, and we possibly get a 5% move here into that 200-day, but it's declining, right? So that 200-day declining in the next couple days might be at 20,800, or whatever it declines down to, maybe a little bit lower, which is where we kind of fell off. So what you want to see happen there, typically what happens is when it hits that 200, especially the declining 200, you'll see a check back to that 50, right? It might undercut it, it might do much worse with it, but as soon as it gets back to that 50, you want to see what happens. If it holds, if it oscillates around there, boom, you're ready for the next leg higher. So stuff to watch. And when you have this on multiple time frames, 1, 2, 4, you want all of them to be doing that at the exact same time, which gives you more power to the upside.
Don't mind me. I'm just going to go buy some puts.
Just wait till it gets to that declining 200 SMA. It has not touched that. If you look back, it was a perfect tag and destruction on what day was that? That is on the 24th of February, right? At that 1 p.m. mark. So just stuff to watch. I know no one cares about, not everyone cares about the intraday timeframes, but if you're trying to understand my process and what I look at, this is an insight to what you should be looking at. You need multi-time frame alignment for moves to have correlations.
Nick, we're running out of time. What do you have? What do you have for us on the last thought?
I mean, per last show, Broadcom's looking great here. All the cybersecurity, Palo Alto, and crowdsource looking good. Toast, Copang, and then Palantir, another 3 that look great here. Copang kind of looking for it to kind of take out this pivot high that it's approaching. Toast already is currently. All of the kind of robotic stuff that's been kind of hot recently is shaping up, along with VRT, Sedge, VST, Jeb all looking good. I mean, I don't know. It depends on if this bounce really is, if it sustains. But there's a lot of stuff kind of breaking out of this little bear flag that we have formed.
I really like
So.
Broadcom. That's a name that I'm watching. I think Broadcom can be a key for tech in general. So I'm watching Broadcom. Broadcom has been stronger than most, and it's up 4.5% right now. So I like it. I like it that it's held this range. I've kept my eyes on Broadcom for the last week or so. So I'll continue to be watching Broadcom. GP, last word?
Restoration Hardware. I am in this name. I've bought them twice now.
Ooh, big bar today.
Huh?
Big bar today.
Big bar today. Every time we've been at this low and level point, we've had a bullish engulfing down here. And as you can see, chart that Ben has provided, it is also a spring setup. I think you have a great risk to reward here. Love it. Am long it. And let's go.
Let's go, guys. Hey, thanks everybody for tuning in and watching. We appreciate it. Our second episode is now in the books. We appreciate all the help. Keith, thanks for getting us straight on the tech. We'll be back next week, somewhere between 2 and 2:15, but Wednesday's our day, and we'll see you then. We can't wait, and we look forward to it. Stay bullish or bearish. We'll see how it goes.
Oh, fantastic.
Yeah, soundboard's awesome. Yeah, it was a good one today.
I'll learn to talk less, guys. I will definitely work on that.
GP, we've been doing this for 3 years, and you have yet to